Friends, as the legendary fund manager Peter Lynch says, the easiest way to pick stocks is to understand what you consume on a daily basis, and the companies that produce those products are likely to do well. The reason being, the demand for their products is likely to continue. On these lines, the HDFC Mutual Fund is launching its Non-Cyclical Consumer Fund with the aim to generate high returns for investors. Friends, since it is in our nature to consume stuff, there is always great scope in the consumption theme. There are certain factors that will drive India's consumption in the coming decade. For instance, India's per capita income has increased, and more income means more spending as well. Another factor is India has the youngest population in the world, which means longer lifespans and increased spending. Today, people don't mind opting for premium brands, and with digitization, everyone has easy access to products and services. So there is a lot of room for growth in the non-cyclical sector of the consumer theme. Some of them are packaged foods, home and personal care products, consumer durables like mobile phones and household electronics, quick service restaurants, media, telecom and healthcare services. The demand for these non-cyclical consumer goods will remain stable across different phases of the economic cycle. For example, nobody is going to stop brushing their teeth or stop using the internet if the economy is down. So it is safe to assume that this sector is on the growth path. The investment team at HDFC Mutual Fund have significant experience and understanding of the consumption sector and will follow a bottom-up stock selection approach. As the name suggests, at least 80% will be invested in consumption theme stocks, and the fund is free to invest across large, mid and small cap stocks. The fund's focus is on market leaders with major share in the market they are in and which are likely to witness steady growth. Since this is a new fund, there is no track record to analyze. But what we can look at is the past performance of this theme. The Nifty India Consumption Index has actually outperformed the Nifty 50 index in the long run. Here are some of the stocks that are part of the benchmark index, some of which are likely to feature in this fund portfolio as well. The fund will be managed by Mr. Amit Sinha, who has over 18 years of experience in the capital markets, 10 years of which he spent as a senior equity analyst of the consumer sector in India. He definitely seems to be the right man for the job. Now, to the most important question: should you invest in the HDFC Non-Cyclical Consumer Fund? Before answering this question, let me put forward some of the risks involved in investing in this fund. Firstly, this fund is a new fund, which means there is no past record to look at. Secondly, this fund is a sector-specific fund, and hence majority of the portfolio will belong to one sector. Sector funds generally carry higher risk. Having spoken about the risks, let's look at some of the positives as well. As discussed earlier, the consumption theme has many factors going for it, as demand is only going to increase in the future. Secondly, the non-cyclical consumer companies have been generating the highest returns on capital employed and have very strong balance sheets. Thirdly, the risk of this sector underperforming is relatively low, as it is related to lifestyle products and one cannot do without them. With these points in mind, and based on your risk appetite, you can take a call on adding this fund to your investment portfolio. But I recommend you do so with a partial allocation of maximum 10% and preferably through the systematic investment plan. Also, the risk being high, your investment horizon should be at least 5 years and above. The NFO period is between 23rd June and 7th July 2023. That's all we have on the HDFC Non-Cyclical Consumer Fund. Hope that you found the information useful and do consider subscribing to our channel for more content on mutual fund investing. Thanks for watching.